All right. Matt, the mortgage guy here with everyone's favorite topic, mortgage interest rates and what could be coming in the future if the Fed begins to taper. Before I jump into it and all the details, if you like straightforward mortgage content, the real estate market from an insider's perspective, a mortgage broker that's dealing with hundreds of clients every single month, dealing with real estate professionals and other folks, having daily conversations about what the market's doing, what's changing in real estate and mortgage, please consider subscribing to the channel, like, comment, share, do all that stuff. I'd really appreciate it. So let me jump into this. I was just reading an article and I was just inside of a mortgage loan officer mastermind talking about what could be ahead. Some people are saying that there's some back office conversations going on about the Fed announcing a taper in October of 2021. Now that's next month. What could happen if they announce a taper? I'll tell you what, summer of 2013, when the Fed tapered then, and we saw what was called a taper tantrum, it was bad for mortgage interest rates. So if history tells us anything, we could be in for a wild ride. Nobody thinks it's going to be as bad as it was back then, but I can tell you that if my memory serves me correctly, that summer of 2013, when the Fed began their taper and there was a quote unquote taper tantrum, we saw something like close to a full percent hike up in interest rates in a pretty short period of time. So not saying that's going to happen, but I'm saying that like when the Fed begins to taper, and if anyone who doesn't understand what tapering is, if they're currently buying $120 billion a month in mortgage-backed securities, and they say, listen, we're going to start buying $100 billion a month, and then $80 billion, and then $60 billion, then $40 billion, and they put that plan in place to that's going to be their taper, it's going to have effect on long-term interest rates, on mortgage rates. And I don't know if they're going to announce that in October, but what I do know is that we don't even have to begin the taper. The talk of the taper and the Fed talking about future plans, we know the Fed is powerful enough where their conversations, their words, what goes into those, Fed minutes, whatnot, is powerful enough to move the market, right? Interest rates are going to move because of it. So I like to just warn folks. I don't know. You don't know. The people I'm reading don't know for certain what's going to happen, but be careful because rates could rise. And I literally have gone back and forth and I've been super honest about it, right? At one point I'm saying rates have to be up by the end of 2021. Then I come back a month later and say, you know what? Maybe the Fed can continue to, keep these rates artificially low for years and years to come. Then I see some stuff on, hey, we might taper. I see someone's prediction for 3.5% by the end of 2021. 6 months ago, I thought that was a for sure thing. 1 month ago, I thought, nah, we're going to stay hovering about 3%. Now, I'm telling you, towards the middle of September, I'm thinking, you know what? Maybe it is going to be 3.5% by the end of the year. Here's my honest feedback for you. As a mortgage broker, as a mortgage professional who day in and day out is reading, studying, watching, receiving information, I don't know for certain. I don't know for sure. But the folks that are in the process right now, especially this week, they're locked. We're not gambling. There's much more risk to the downside than there is reward to the upside for floating, right? And so there's some people that are stuck in a position where they've got a new build that's not done until February or March. That's a whole different thing. If you're entering into a refinance and you like the rate, you lock it. If you're entering into a purchase and you like the rate and you're closing in 30 days, you lock it. You don't take chances because there's way more risk to the downside. And on the upside, if rates get a smidgen better and your rate goes from 2.854 to 2.423, the $1.63 you're saving per month is not really worth rates sliding the other direction farther. That's going to cost you $20 a month. So my 2 cents. If you like this, please consider subscribing to the channel. If you want in-depth course, Mortgage 101, mortgage jargon, things you should know, whether or not you should refinance, a bunch of good golden nuggets. In the description below, you'll find a link to my Mortgage 101 course. I'd love it if you checked it out. If you don't like it, full refund. If you do like it, give me the feedback. Let me know what you'd like me to add. I'd be happy to. Thanks for watching. I appreciate your support. We gonna see.